Hi guys, how's it going? I hope everybody is having a great weekend so far and had a great week last week. We're going to look at the weekly analysis for gold. Um, so without further ado, let's just jump right in. Looking at the upcoming week, we have the Monday with no necessarily news on US dollar. We are heading into the week with a huge amount of market movement in the past week. We'll look at what movements have been made in the past week. We'll look at the movement that we expect. So based on the news segments, based on the each daily news, we'll look at what kind of range we can expect, what is the overall expectation for the week, where we might end the month since this is the last week of the month. So looking at news, Monday we don't really have much news scheduled. However, on Tuesday we do have jolts coming up. So and CB consumer confidence. So if you look at the both of them, it's going to be a high impact overall movement. Both of them come out at 10 a.m. So pay attention to what kind of a movement market has created, what kind of a level market has stayed on Monday. Wednesday we have ADP, another high impact. So back to back, we are going to have two news that are going to talk about the employment situation within the US, followed by we have goods trades balance. So overall, Wednesday seems to be focused. We have GDP growth rate as well. So overall, Wednesday is focused to tell us more about the all-in-all conditions of the economy for US, and so this could be a very high impact day. A lot of movement coming in, starting at 8:30, 8:15 actually, all the way down to 10:30 a.m. EST or 10 a.m. EST. So it's going to be pending home sales as well. So it's going to be an interesting specific day. Thursday, we do have a bunch of news coming up. We have jobless claims. Since we have ADP and JOLTS the day before, the couple days before, even though this news comes up every other week, it's probably gonna see a lot of movement because that could be the reaction coming off of ADP and JOLTS. So be very cautious with this news. Don't take it lightly. Average range that we expect for this news is generally around 30 to 60 pips, but it could give us a bigger move because it's combined with a PCE, once again going to give us some inflation based expectations, and then personal income and personal spending, another thing that's going to tell us about what to expect inflation wise. Are we going to see an increase in inflation, or what kind of decision making process Feds might go through when taking the interest rate decision coming next month. So Thursday, very high impact, and then followed by Friday. Friday looks to be also very, very high impact. We have unemployment rate, we have non-farm payrolls, we also have global manufacturing PMI. So overall, this is also going to be very, very interesting day because this is the start of the month. The day before is the end of the month. So the last 2 days of this week, ideally, a lot of traders try to avoid these 2 days, because they're end of the month and start of the month. So you want to see how the market ends its month and where the market starts its month before you get into new trades. And so these 2 days with such high impact followed back to back might give a lot of movement. So if you're taking trades during this day, you need to know the levels that you're going to be trading on. Specific levels, take trades very carefully in these situations, okay? So that is news. Let's jump into the charts and see what is happening so far. So we ended the week creating a new low compared to the previous month. On the monthly, we ended up ranging to so we dropped down to 1885. So we found support within this range, got rejected at 1965. We're not able to close the previous week above 1919, which seems to be the previous 2 monthly body lows, meaning that is a decent level of resistance sitting right there. We can see rejections on the monthly in those regions. So, okay, weekly are respecting those. We also see a rejection sitting at 1929. So, okay. Previous monthly, we had rebounded off of 1903. The one before that, 1893. So 1885, 1893, we're kind of closer to the same range. We are not necessarily broken below a major range. There's a doji sitting right here, which is kind of acting as the area of support for the current monthly. Again, I've mentioned this multiple times. Dojis, no matter how far back they are, they can still act as an area of support. Those could be good levels for institutions especially. I've also drawn here a trend line that I saw on the monthly that we hadn't taken into consideration before. It has 1, 2, and 3 touch points now. Even though this monthly hasn't closed yet, we can consider this as a valid trend line. Once this candle closes in the coming week, we will know what direction it's moving to. We don't have a top wick yet, so we'll look at what to expect through the week based on the weekly chart. But the next monthly could pretty much break below or continue up, just given the power of a monthly trend line. So let's look at the weekly situation. So if we look at the weekly, let me hide the monthly trend line. So this is the weekly trend line as of the moment. This is what we have been following through. We have 1, 2, and 3 taps sitting in that range. Market has followed through on it, rejecting at 1919, unable to close above that range. Again, another doji giving us a rejection, so a clean rejection at that level. So we need to break above 1919 and close above for price to continue further up. At the moment, we can expect a rejection. If the current weekly continues to drive further up, we can expect market to tap into 1950, 1942 range, which is again going to be another doji. There is a good amount of rejection sitting there historically, so we might see a rejection coming in at that level as well. Okay. If you look at the one that we pulled this trend line again on the basis of the monthly, and currently based on the weekly, it is also a perfect trend line. We have 1, 2, 3, and 4, kind of 5 touch points sitting in that level. Market rejecting at that level. Now we are forming kind of like a symmetrical triangle on the higher time frame, on the monthly and on the weekly. So the market is kind of moving through a channel towards the downside. Will that channel break? Will market be able to make the decision of going further down, or will it try to push further up and take support and keep going up? If we break above this trend line, we are switching trend again and we are pushing up, right? This is the main reason that we don't take trades just based on the trend. We want to take trades based on the levels. Which areas can price find the best amount of support and resistance, right? So with that, okay, I think we're good. So there is a trend line that we have broken on the weekly. So let me pull that one. So this was the trend line that we broke previously. And now we are on our way to retest it after we broke, which based on the upcoming weekly is 1946. So 1946 looks to be a possible level that market can move up into. 1946, 1945. Yeah, 46, 45 looks to be a good range where we can probably see a reversal coming in. So let's mark off this here. This is the level that we're trying to break through, retest to, sorry. So looking at the weekly, that is the range. The following weekly, we might just tap into this trend line and then continue down. So the story that we see right now is price to continue up. Tap to the trend line and then drop down. Right, we get narrower into the symmetrical triangle, so we have to make a decision. Both of these trend lines are on the weekly, but only this trend line here is on the monthly. So this one, which has taken support, does exist on the monthly, right? So which one will it continue to support, or let's see. Going into the daily, so let's look at the line chart here. If you look at the line chart, the market is going back to retest this level. We haven't really made a good retest, so no bodily rejection or closures in that range, indicating that price is dropping down. So if we see like a doji like closure like we see here, we might reverse all the way down, right? So the weekly again has a scope of becoming a doji like candle, something of this sort, right? We created this, we went back down, we created that, we went back up, created that, and then continued down. So a lot of things possible at this point in time. Once we break through that level, the next level of support is going to be 1866, after which we might go back up again for the retest of this trend line and then continue further down into 1811. So break of one doesn't necessarily take away all the challenges that it still has ahead of it. Okay, so let's see what that is going to be looking like. Jumping into the daily. So looking at the daily, currently, yes, we do have a good level, okay, right there. So daily, we can expect, we have two dojis sitting right here, two dailies closing above 1912. So now we can consider that this has now formed support, which we can see is a good area of support. The next daily can actually continue further up. If you look at the daily on the RSI still has range to move up. We were rejected around the 50% line, unable to close above, and eventually dropping down. So next coming week, we have very high impact news which could give us that 1, 2, 3, 4, and then drop. So next week is going to be very, very high impact. So you have to be very, very careful in taking trades. So currently we can expect price to continue to take support at this point in time. Till we break below 1911, we cannot expect price to continue into sales. So be very cautious in that position. If we are looking for buys, again, that becomes complicated as well with the two doji closures sitting right here, which means price just consolidated into this range, which historically it has on its way down as well. And there's a huge amount of consolidation sitting here on the daily. So the daily could just continue to consolidate, then push up, and then drop down. So anything can happen this coming week. However, for the upcoming Monday, I can definitely expect price to try and make a break. I don't know if Monday without news is going to be that powerful, the momentum, because what we see here, these two daily closures, is the wait for the upcoming news is. So since the market is waiting for the news, it's best that you try to stay out of trades for the coming Monday and see what kind of reaction market gives to news on Tuesday, and then look at trades. Otherwise, you'll be risking a lot of your money. And if you're fine paying out your money to the banks, paying it out to people like me, I'll take it. Right? So be very careful. If you don't want to do that, only take trades once you know what direction the market is trying to head towards, and then look at levels and take those trades based on those levels. Don't try to catch the trade midway. So a lot of traders will be tempted to try and take a sell to see if this candle is filled up. We've just mitigated the imbalance and then just continued our way up, not continuing our way down, which means we are on our way further up. So you don't want to be stuck in trades that you will regret with the upcoming week, because market might just take away your stop losses. If you're trying to take sells, if you're trying to take buys, it could still do the same thing. We never know what direction it's going into. So one expectation is, with this kind of a move, if we are able to close back below 1911, this is what we might see: eventual push up, and then maybe a further breakdown. But as we know, inflation has been going up, so those inflation fears can still pop up, and we might end up doing this, right? Because what is curious here to look at is, if you look at the monthly, we are still consolidating, right? We are still consolidating. If you look at the weekly is a channel drop. So bullish move up, kind of like a huge flag, right? So this makes it even more challenging for you to take a trade on it. So be very cautious in this overall trade, right? So if you look at this, the monthly movement, the channel drop, why not? Market can definitely make that push up. So be very careful, right? And so this is one option that we have seen. Second is, we are able to take support at this range, push further up, and see a closure, push up, rejection again, drop again, and then eventually making this here. So this is something that I am expecting for sure. 1950 is something that I have been looking at for a decent amount of time. And why is that? You can see that on the daily, that is a good area of rejection, right? The rejection comes in all the way up until 1947, 1950 area, which is kind of the spot after which we continued into sells previously. Yes, 1940 looks like a good level of rejection as well. However, coming up 1957, 1960 is also a very, very, very good level for continued sells. We continued the range towards the downside, the channel towards the downside, after we took support, a slight support at 1944, eventually breaking through. So 1954, 1951, 1946, definitely good levels. So market can try to make a push up. It might still get rejected at the trend line after the retest and continue further down, but it could still try to break above and then come back down, right? So be very cautious in taking massive sells here. Next thing that we want to be considering is, what if market starts to range? What if market starts to range a little bit? Taps up, goes up. The higher this retest goes, the higher the chance of this trend line getting broken. Once we break through a channel, once we break through a trend line, we need to be able to retest it as soon as possible, because then you can trade with trend in that situation. Till then, it's an unsafe trend. If you're trying to take scalps, fine, you can look at lower time frames and you can take trades within this range. But as you can see, it's not a huge amount of movement. It's very small amounts of movement. Look at the type of movements that we've seen in the past, the range that we can see. We haven't necessarily seen that massive range towards the downside, which means even though we went bearish, this looks more of something like people going on vacation and letting the market do its thing, market doing its thing, people trying to sell it off. But again, look at the push up. This candle here engulfing pretty much 2-3 candles sitting right here. So bulls coming in strong. Why did this thing happen overall? So you got to think about it from the overall market structure perspective. End of summer, start of fall, people coming back, volume coming back. So the market conditions overall have changed. So you got to be very careful in taking trades now at this point. So let the market break above and see a closure above 1920. You can look for price. Better yet, if market gives you a closure above 1926, which ideally it should have gone up and rejected at that range. We've started rejecting right below 1923, so right at that level, which is comparatively a weaker area of rejection. A stronger area of rejection is sitting at 1925. We never reached that point. So we could still see market trying to make that attempt to break above 1925 and hopefully close above 1919. You see that closure, and then the next day, based on news, could keep pushing price up. So take very careful trades in that perspective. So overall, the upcoming week looks like it could be bullish for the dollar. Eventually, the end of the week might end up starting to give us that bearish movement. So we might see a overall mixed movement up and then down. So be careful there. Let's take a quick snapshot view into DXY. So DXY has been doing some interesting stuff. On the higher time frames, it's starting to break above. Now, can we consider that it has broken above and going up? Well, we're looking at the monthly trend line. The monthly trend line for that. If the upcoming week takes a further drop down, we might see that as a monthly rejection, and that would just be a wick in that situation. So not to worry there. We can look at the RSI. The RSI took support at the moving average line and then try to push further up. So we might as well see that drop, break through that moving average line, and continue that drop. So 50% line again could end up giving us the support and giving us that further push up. So DXY is giving us a signal of dollar probably looking at making a drop, and then maybe we might see that push up. Because look at the movement that we've had. We've constantly kept pushing up and up and up, which is not a sustainable move. So something of this sort, the drop was significant and then continuous. So if we see this kind of movement, we know what kind of movements follow through. And so that is what we've been expecting. We are expecting DXY to start to melt soon. And if we see this kind of a movement coming in, this is possible in the coming week. Gold's monthly could flip. And if it flips, then you know what's going to happen. So that's why, based on DXY, it's still a dangerous territory. So be very, very careful in the overall week. Let's look at the overall fundamental perspective in the coming week and then trade based off of it. Okay. So with that, that is the overall weekly expectation. We have an interesting week up ahead, end of the month coming up. So be very careful in taking any trades. Don't enter any positions that you don't have confidence within. Look at levels, understand what the market is trying to do, understand what is the economic conditions in the markets, and only then enter the trades. If you don't understand it, stay out of it, save your money. The following week, you will have good amount of information, and the second week of September is where you should actually focus more on towards trading. Till then, it doesn't look like a pretty picture for the upcoming week, so it's going to be a risky week. So be careful in taking any trades in that situation. Okay, with that, this is the overall weekly overview. We expect it to be overall bullish for gold, which means bearish for the dollar, and then overall and then at the end of the week we expect a rebound, expecting a test of this trend line in the coming week. If we get that, fantastic. We might look at what reaction it gives in this region and then take long-term swings or hedges based off of it. Till then, patience is going to be key. We'll wait for the trade to trigger and then take trades based off of it across the next few days. Okay, so I will see you guys back next week with Asian session. We'll look at trade setups based on the daily structure and hopefully find some profitable trades. Okay, in the meantime, have a good rest of the week, rest of the weekend, and a fantastic and profitable week ahead.